right now, it's an exciting time for fundamentalists because there's actually stuff going on. It's actually fun to be a fundamentalist at the moment. What do you got for us this week?
Hi, Paul. Yeah, great stuff. I actually really love the gold stuff. And I think I'm on the same, very similar tone. Ash mentioned bonds, that's causing the movement in gold. And just nice for this week, I prepared a couple of bond comparisons to share with for those of you who are interested in the bond markets and how it will kind of affect currency. So I've got here the two chart comparisons. So as you guys know, just for those who are very new to this, the bond prices and bond yields are always inversely correlated. So I have here an example. Let's just follow the easy one first. We'll do the US. So I'm going to have US 10-year. This is a US 10-year bond yield, but together with the US 10-year bond price, right? So we have the US 10-year bond. Hang on, let me just swap it around. This is the US 10-year bond yield, and this is the US 10-year bond price. So if you kind of look at it, I think there's some kind of data missing at this spot here. You can see that the bond prices and the bond yields are inversely related. All right, and what it comes to show is as the interest rates start to go up in the various economies, in the various countries, what that happens also is the potential yield of bonds start going up as well. So it means at some point, if you buy a bond now, 10 years later, 5 years later, depending on what you buy, you will get a guaranteed coupon rate of a certain percentage interest. So bonds start to get attractive again in portfolios when yields start to get higher, when interest rates start to get higher, because it's good. It's a good way to build pension funds or stability funds, stable funds, right? We always talk about why do we have bonds in our so-called financial portfolio? It's for stability. It's because it's a government asset. You're not going to get a default, etc., etc. So bonds start again to become interesting because the yields are getting higher, which means the prices are getting cheaper. All right. So I'm talking about long-term investment, not trading. Of course, if you're talking about trading, meaning buying and selling the bonds based on the price movement, that's a different story. But we're talking about long-term investment, 5-year, 10-year, the pension funds, the hedge funds who work for these pension funds. They have to start planning their portfolio so that they will be able to pay out pensions, etc. Which governments do they want to start buying the bonds from to receive that stable income, the stable interest rate, the stable yield in that sense, right? So it starts to get really interesting because with the increase in bond yields, bond prices have dropped as well to make up for the differential. So here is the US. You can see the bond yield for a 10-year is up to 3.15%. It's like almost a double top happening. It's peaking over here. All right, we have Australia. So this is the Australia 10-year bond and Australia 10-year yield at the bottom. You can see the inverse correlation. All right, also you can see the Australia bond yields have broken above the so-called previous peak here, 3.5-ish. Now it's 3.7%. Bond prices have come down as well. All right, let's look at Japan. Japan is something that everyone's looking at this current couple of weeks. We have Japan 10-year bond prices and Japan 10-year yields, right? This is Japan. All right. So the interesting thing is because Japan is a risk-off currency, people buy the Japanese bonds. It's very being risk-off. It means they find the government pretty stable-ish. But what is interesting is the way the bond prices move is starting to get interesting. You can see that although Japan has a 0% rate interest for the past many years, you can see that the prices are also kind of not moving anywhere. All right. And if we compare it to the US market, right, everybody's trading the dollar yen because of the interest rate differential, right, the interest rate difference. You can see that there's something happening around here. A squeeze is kind of happening. And the question is whether or not the dollar yen will continue to increase, right, because the dollar yen has been going up for ages and ages. So news have been coming out from the Japanese yen side. They have been, I think people are starting to get worried now about the weakness of the Japanese currency. So Kuroda has already come out a statement on June 8th saying that he's apologized for his statement and they are actually quite concerned. The Japanese yen is now a 24-year low against the US dollar, and there are some predictions. There are some predictions that the yen could go to as high as 150 to the dollar, but now it's almost 140. So I'm thinking that usually analysts like this, they kind of overshoot they say 150, but actually, before it reaches 150, it might just turn around. So I'm going to be very careful when I'm trying to still short the yen. All right. I think the yen has been shorted quite its extremes. It might have a little bit more leeway to go, but I don't know how long more it has to go. And you can see that appearing in the bond yields as well. There is a slight push up to the bond yields. I think something's happening. It's almost at the top over here. So I don't think the yen will weaken very, very much further. One thing is the technical caution that is already at its extremes, but I think the yields are reacting as well. You can see bond prices, they've come all the way down to lows as well. So I think if bond prices start to break below this level of bond yields, and for that to happen, the bond yields has to change. I think this is like a point of change. There is an indication that something's brewing in the governments, right? But we just don't quite know where they're going at. So the whispers of the rumors are starting to come out, right? The Japanese, I think last week, the Japanese commercials are worried about the weaker yen. And then later on now, they're talking about the consumers, the consumption side of the market are now worried about the weakness of the Japanese yen. So I think with the pressure from the commercial side and from the general sentiment of the worry of this weak yen, I think governments are going to come out and make some kind of statement. We just don't know what that is. And with that statement, if the Japanese is still going to hold on to I would love a weaker yen policy, we might see a bit more shoot in that weak yen. But with all the worries coming in, we might just have a flat line over here and the consolidation happening. Maybe the yen might go sideways for a little while, so it might be probably beneficial for the range traders, not so beneficial for the trend traders. So we are looking at almost the end of a trend, not quite sure yet. So I would say trade the yen with a bit of caution because the bond prices are looking something strange is happening over here. So this is this will be interesting to check out. And I will be very attentive to news coming out from the Bank of Japan for the next couple of weeks. All right, something's happening over there. On the other end of the spectrum, a quick one. I think everybody knows the euro is starting to move because very simply, European Central Bank confirms July rate hike plans. All right, so I think the plan to increase interest rates are more or less confirmed. The yen, the euro has already started to react to it. A bit of strength is coming back into the euro. So little quick peek, since we're on the topic of bonds, this is the 10-year euro bond price. And this is the 10-year euro bond yields, all right? And the market has reacted already, all right? The bond yields has already popped up to 1.5%. So I think pretty much is a precursor, pretty much guaranteed they will kind of announce something a bit more firm sooner or later. So I think July is already going to be starting to, the euro strength is starting to price in already. So I think for the next medium term at least, a bit more strength will be coming back into the euro. Right, it seems that they are finally making a move. So I think the euro will be the interesting currency to trade in the next couple of weeks. That's all for me.